Today, we need to talk about something that could end up being one of the biggest stories in crypto this entire year. Because behind all the noise, behind the price action, behind the arguments on Twitter, something very important just happened involving Ondo Finance, Ripple, Mastercard, JPMorgan, and the XRP Ledger. And the reason this matters is not simply because Ondo pumped. It's not because XRP holders are frustrated that XRP itself didn't move as aggressively. And it's not just another institutional adoption headline that people throw around every single week. This story matters because it gives us a glimpse into what the future financial system could actually look like. Because for years, people imagined crypto adoption as banks disappearing, everyone using decentralized wallets, and traditional finance getting completely replaced. But what we may actually be watching happen instead is something much more realistic and honestly, probably much bigger. We may be watching traditional finance slowly connect into blockchain infrastructure piece by piece. And this Ondo story is one of the clearest examples of that so far. Before we get into it properly, welcome back to the channel. If you're new here, my name's Paula. On this channel, we look at crypto, macro, financial systems, and the bigger stories shaping where money and technology are heading next. I don't just want to talk about coins pumping and dumping. I want us to understand what institutions are building, how these systems connect together, and why certain narratives are becoming so important. And trust me, this one connects to a much bigger picture. So let's start with what actually happened. Ondo Finance announced it had completed a pilot involving Connexus by JP Morgan, Mastercard, and Ripple. The pilot involved the redemption of Ondo's tokenized US Treasury product, known as OUSG, on the XRP ledger. According to the official announcement, the asset leg of the transaction settled on XRPL in under 5 seconds, while the fiat side of the transaction was routed through Mastercard's multi token network and settled through Connexus by JP Morgan and JP Morgan's correspondent banking infrastructure. Now, I know that sounds incredibly technical, but when you simplify it, what happened becomes much easier to understand. Ondo is a tokenized treasury product. Ripple redeemed part of that treasury product using infrastructure connected to the XRP ledger. Mastercard's network helped route the transaction instructions between systems. JP Morgan handled the banking side settlement and delivered the US dollar proceeds to Ripple's bank account in Singapore. And that's where things get interesting. Because this was not simply JP Morgan using XRP, that would not be accurate. And this was not MasterCard moving all the payments onto blockchain. That would also be wrong. What this actually was, it was a hybrid system, part blockchain, part traditional finance, part tokenized assets, part bank settlement rails. And in my opinion, that's probably what the future of finance actually looks like. Not crypto replacing everything overnight, but crypto infrastructure slowly integrating into the existing system. Because behind the scenes, global finance is still surprisingly slow. Cross border payments can still take days. Banks operate within specific hours. Markets close. Settlement processes involve multiple intermediaries and layers of reconciliation. The system works, but it's fragmented and inefficient. Blockchain technology offers something very different. Assets can move instantly. Markets can operate 24/7. Settlement can happen in seconds instead of days. Transactions can become programmable. Liquidity can potentially move much more efficiently across borders and between systems. And this is why institutions are becoming increasingly interested in tokenization. Now, let's talk about Ondo itself because a lot of people have seen the price movement and are asking why this project suddenly became such a huge narrative. Ondo Finance sits directly in the real world asset sector, often called RWAs. The basic idea behind RWAs is simple: taking traditional financial assets and representing them on blockchain infrastructure. In Ondo's case, its OUSG product gives exposure to short term US Treasuries in tokenized form. And this is important because US Treasuries are not some niche financial instrument, they're one of the foundational assets of global finance. They are widely used as collateral, held by institutions around the world, and treated as one of the safest and most liquid assets available. So, if institutions are exploring tokenization, treasuries are one of the most logical places to start, and that is why Ondo has become such an important project within this narrative. Now, there have been claims circulating online that Ondo rose over 137% from its February lows following this announcement. That percentage appears to come from analyst commentary and market observations rather than Ondo's official announcement itself. But the broader point still stands. The market reacted very strongly to this story. And honestly, that reaction makes sense because this was not just another crypto native partnership. This involved Ripple, Mastercard, JPMorgan, tokenized treasuries, and public blockchain infrastructure all working together in one pilot. That combination immediately makes people pay attention because it signals something much larger than speculation. It signals institutional experimentation with real financial infrastructure. And I think this is where people need to zoom out slightly and look at the bigger trend. Over the last few years, crypto has slowly been shifting away from pure speculation narratives and towards infrastructure narratives. Last cycle was dominated by memes, NFTs, retail mania, influencer hype, and projects launching with very little real world connection. But this feels different. The biggest narratives now increasingly revolve around stablecoins, tokenization, payments, AI integration, settlement infrastructure, real world assets, institutional adoption, and interoperability. And Ondo sits directly inside one of the strongest institutional narratives in crypto right now: tokenized assets. Because if tokenization actually scales, the implications are enormous. Imagine financial markets operating 24/7 instead of closing. Imagine assets moving globally in seconds. Imagine collateral becoming programmable. Imagine tokenized bonds, tokenized funds, tokenized commodities, tokenized real estate, and tokenized money market products all interacting across blockchain infrastructure. That is the long term vision institutions are exploring. Now, does that mean everything will suddenly move on chain tomorrow? No. And this is where I think a lot of people misunderstand institutional adoption. Retail often imagined adoption as institutions suddenly becoming crypto maxis, but that was probably never realistic. What institutions actually want is efficiency. They want faster settlement, they want reduced operational costs, they want programmable assets, they want better liquidity mobility, they want systems that can integrate with existing compliance and banking infrastructure. And that is exactly why this Ondo pilot matters, because it demonstrates a possible bridge between blockchain infrastructure and traditional banking systems. Now, let's talk about XRPL specifically, because this is where the story becomes slightly controversial. A lot of XRP supporters looked at the news and said, hold on, if the XRP ledger was used as part of the underlying infrastructure, why did Ondo pump harder than XRP? And honestly, it is a fair question, but I think both sides of the argument are oversimplifying things. Some XRP skeptics immediately dismissed the story because XRP itself did not explode in price. But I think that ignores how important infrastructure positioning actually is. At the same time, some XRP supporters exaggerated the implications and acted as though this pilot automatically means every bank is now adopting XRP. The reality is somewhere in the middle. What is factually true is that the XRP ledger processed the asset leg of the transaction in under 5 seconds. That is the official announcement. What is not confirmed is that XRP itself was used as the settlement asset for the dollar movement. The fiat settlement side was handled through Mastercard's multi token network and JP Morgan's infrastructure. That distinction matters because blockchain usage and token demand are not always the same thing. A blockchain network can be used as infrastructure without its native token immediately repricing dramatically, but that does not make the infrastructure usage irrelevant. In fact, this pilot strengthens the argument that XRPL is increasingly positioning itself as infrastructure for tokenized assets and institutional finance. And when you look at what XRPL has been building over the last few years, that direction becomes much clearer. Most people still associate XRPL mainly with payments and cross border transfers, but the ecosystem has expanded significantly beyond that. XRPL now includes tokenization functionality, a built in decentralized exchange, automated market maker functionality, stablecoin infrastructure, institutional DeFi development, compliance oriented asset features. And this is important because institutions do not just want fast chains, they want systems that can handle tokenized financial assets in a controlled and compliant way. XRPL structure is attractive for some institutional use cases because it combines fast settlement, low fees, built in token issuance, and predictable transaction finality. And this is why projects connected to XRPL have been growing rapidly whenever institutional narratives strengthen. Because the market is beginning to understand that XRPL may not simply be competing as another retail focused blockchain. It may be trying to become infrastructure for tokenized finance. And that changes how people start valuing the ecosystem. Now, let's talk about Mastercard because I actually think their role in this story is being massively overlooked. Mastercard is not trying to become a crypto exchange, it's trying to become connective infrastructure. Its multi token network is designed to connect traditional financial systems with tokenized assets and blockchain based settlement systems. And that's really important because one of the biggest problems in tokenized finance is interoperability. Different systems do not naturally communicate with each other. Banks use one infrastructure, blockchains use another, payments networks use another, fund issuers use another, settlement providers use another. So the question becomes, how do these systems interact in a way institutions are comfortable with? That is where companies like Mastercard become extremely important. They're building the connective layer between traditional finance and blockchain systems. And that is exactly what happened in this Ondo pilot. Mastercard's network routed the settlement instructions between systems, while the blockchain and banking infrastructure handled their respective settlement processes. And honestly, that may be one of the most important long term themes in crypto. Not one blockchain dominating everything, but multiple systems interacting together. Public chains, private ledgers, stablecoins, banks, payment networks, tokenized assets, settlement providers, all connected into one interoperable financial network. Now let's talk about JP Morgan because this is another part people misunderstand. JP Morgan has not suddenly become a crypto company, but it has been exploring blockchain based financial infrastructure for years through its Connexus division, previously known as Onyx. The bank clearly sees value in blockchain enabled settlement systems, especially when combined with regulated financial infrastructure. And this is what I think a lot of retail often misses. Institutions are not necessarily trying to replace the existing financial system, they're trying to improve it. That means integrating blockchain technology where it creates efficiency while still maintaining compliance, regulation, banking controls, and fiat settlement systems. And honestly, from an institutional perspective, that makes complete sense. This is why this pilot feels so important because it's not a theoretical discussion anymore, it's real world experimentation. Now, does that mean tokenization is guaranteed to take over finance? No, there's still huge challenges, but the direction of travel is becoming increasingly obvious. Institutions are no longer ignoring tokenization, they are actively testing it, and that is the key difference. A few years ago, these conversations felt theoretical. Now we're seeing live pilots involving some of the largest financial infrastructure companies in the world. That changes the conversation completely. And this is why I think Ondo's price reaction was so aggressive, because the market is beginning to realise that tokenized finance may actually become one of the biggest sectors in crypto over the next decade. Not memes, not hype, not speculation alone, but infrastructure, financial infrastructure. And this is where the XRP conversation becomes really interesting. Because for years, XRP supporters argued that the real value proposition was infrastructure, settlement, and financial connectivity rather than retail speculation. Whether people agree with XRP or not, this Ondo pilot does support the idea that XRPL is increasingly being considered for institutional grade tokenized asset infrastructure. Now, that does not automatically mean XRP price immediately explodes. And I think it's important to stay balanced here. A pilot is still a pilot. This was not JPMorgan moving the entire Treasury market onto XRPL. It was not Mastercard replacing Visa with blockchain overnight. And it was not global banks suddenly adopting XRP as the standard settlement asset. But it was still a major signal. Because what matters right now is not mass adoption overnight. What matters is direction. And the direction is becoming increasingly clear. Tokenized assets are growing, stablecoins are growing, institutional blockchain infrastructure is growing, cross border settlement experimentation is growing, banks are exploring integration, payment companies are exploring interoperability. And XRPL is increasingly positioning itself inside that conversation. Now, let's zoom out even further because I think this story connects to something much bigger happening in the global financial system. For decades, finance has operated in layers that were built before the internet age. Markets close, settlement takes time, assets move slowly, different systems struggle to communicate efficiently, cross border transfers are expensive and fragmented. Blockchain technology changes the architecture itself. Suddenly, assets can become programmable, markets can operate continuously, settlement can happen almost instantly, liquidity can move globally without the same friction. That does not mean every blockchain project survives. In fact, I think the market is becoming much more selective now. Projects connected to real infrastructure, real demand, and real institutional experimentation are increasingly becoming separated from projects driven purely by hype. And that's why narratives like tokenization and RWAs have become so powerful, because they connect crypto to actual financial utility. And if crypto truly becomes infrastructure for financial markets, then the biggest winners may not necessarily be the loudest projects. The winners may be the rails, the settlement layers, the interoperability providers, the tokenization platforms, the liquidity infrastructure. This is the shift I think we're beginning to watch happen. And honestly, I think most retail investors still do not fully appreciate how big tokenization could become. Because if tokenized treasuries work, then naturally the next question becomes, what else gets tokenized? Money market funds, corporate bonds, equities, commodities, real estate, private credit, collateral markets, potentially almost everything. And if that happens, then blockchain infrastructure becomes deeply integrated into global finance, whether people realize it or not. And this is why this story matters so much. Not because Ondo pumped, not because XRP did not immediately explode, but because this pilot showed us something very important. It showed us that major financial players are actively experimenting with connecting tokenized assets, blockchain infrastructure, payment networks, and bank settlement systems together into one flow. That is the real story. And honestly, I think this is probably how adoption happens quietly, gradually, infrastructure first. Most people will not even notice it happening. They will not care what chain settles the asset. They will not know which ledger processed the transaction. They will not understand how tokenized collateral moved behind the scenes. They will simply use faster, more efficient financial systems without realizing blockchain infrastructure is underneath them. And that is why I think this Ondo, Ripple, Mastercard, and JP Morgan story is such an important glimpse into where things may be heading next. Because for the first time in a long time, crypto is not just talking about changing finance, it is actually starting to connect to the plumbing of finance itself. And if that trend continues, the implications for this entire industry could be enormous. So let me know what you think in the comments. Do you think Ondo is the biggest winner from this story? Do you think XRP and XRPL are being underpriced as infrastructure plays? Or do you think the market is getting ahead of itself because this is still only an early stage pilot? If you enjoyed this video, please like, subscribe, and turn notifications on because we're going to keep following these stories closely, especially as tokenization, stablecoins, and institutional blockchain infrastructure continue to be one of the biggest narratives shaping the future of finance. And as always, if you want to know the exact strategies we use in the Crypto Wolf Pack to make money in both the bull market and the bear market, we've made a completely free trading course for you. The link is in the description below. Thank you so much for watching, and I'll see you in the next one.